5 ways to invest in real estate. Investing in real estate is one of the most rewarding and wealth-building strategies. Here are 5 ways to invest in real estate. 1. Buy real estate investment trusts. 2. Use an online real estate crowdfunding platform. 3. Invest in rental properties. 4. Invest in fixing and flipping properties. 5. Become an Airbnb entrepreneur. 1. Buy real estate investment trusts, REITs. What is a REIT? REIT rhymes with sweet, stands for Real Estate Investment Trust, and its popularity is growing for investors who seek to expand their portfolio beyond publicly traded company stocks or mutual funds. REITs are companies that own, and often operate, income-producing real estate such as apartments, warehouses, self-storage facilities, malls, and hotels. Their appeal is simple. The most reliable REITs have a track record for paying large and growing dividends. Still, that potential for growth carries risks that vary depending on the type of REIT. REITs are required to meet certain standards set up by the IRS, including that they return a minimum of 90% of taxable income in the form of shareholder dividends each year. This is a big drawback for investor interest in REITs. Receive at least 75% of gross income from real estate, such as real property rents, interest on mortgages financing the real property, or from sale of real estate. Have a minimum of 100 shareholders after the first year of existence. Have no more than 50% of shares held by 5 or fewer individuals during the last half of the taxable year. Number 2. Use an online real estate crowdfunding investing platform. If you're familiar with companies such as Prosper and Lending Club, which connect borrowers to investors willing to lend them money for various personal needs, such as a wedding or home renovation, you'll understand online real estate investing. These platforms connect real estate developers to investors who want to finance projects, either through debt or equity. Investors hope to receive monthly or quarterly distributions in exchange for taking on a significant amount of risk and paying a fee to the platform. Like many real estate investments, these are speculative and illiquid. You can't easily unload them the way you can trade a stock. The rub is that you may need money to make money. Many of these platforms are open only to accredited investors defined by the Securities and Exchange Commission as people who've earned income of more than $200,000, $300,000 with a spouse in each of the last 2 years, or have a net worth of $1 million or more, not including a primary residence. Alternatives for those who can't meet that requirement include Fundrise and Realty Mogul. Number 3. Think about investing in rental properties. Investing in rental property can be lucrative, but it can come with many challenges. When planning on owning rental properties, be ready for the challenges, but don't let them intimidate you. Know that there are solutions that can help you overcome them to start making money in rentals. Borrowers usually need to secure at least 20% down payment for a rental property mortgage. Being a landlord requires a broad array of skills, from understanding basic tenant law to fixing a leaky faucet. Experts recommend having a financial cushion in case you don't rent out the property or if the rental income doesn't cover the mortgage. Number 4. Consider flipping investment properties. You invest in an underpriced home in need of a little love, renovate it as inexpensively as possible, and then resell it for a profit. Called house flipping, the strategy is a wee bit harder than it looks on TV. There is a bigger element of risk because so much of the math behind flipping requires a very accurate estimate of how much repairs are going to cost, which is not an easy thing to do. You might consider finding an experienced partner, Maybe you have capital or time to contribute, but you find a contractor who is good at estimating expenses or managing the project. The other risk of flipping is that the longer you hold the property, the less money you make because you're having to pay a mortgage without bringing in any income. You can lower that risk by living in the house as you fix it up. This works as long as most of the updates are cosmetic and you don't mind a little dust. Number 5. Become an Airbnb entrepreneur and invest in short-term rentals. Finally, to dip the very edge of your toe into the real estate waters, you could rent part of your home via a site like Airbnb. It's house hacking for the commitment phobe. You don't have to take on a long-term tenant. Potential renters are at least somewhat pre-screened by Airbnb, and the company's host guarantee provides protection against damages. Renting out a room feels a lot more accessible than a fancy concept of real estate investing. If you've got a spare room, you can rent it. Like all investment decisions, the best real estate investments are the ones that best serve you, the investor. Think about how much time you have, how much capital you're willing to invest, and whether you want to be the one who deals with household issues when they inevitably come up. To conclude, if you don't have the do-it-yourself skills and you don't have a big capital, you need to consider investing in real estate through a REIT or a crowdfunding platform rather than directly in a property. Thank you for watching this video and stay tuned for more real estate educational materials.